Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us from the market site in Times Square, New York City, we have Jack Miller. He's the head of global execution services over at Baird, and we're going to take a look at the ambitious agenda for market structure reform. Jack, it's great to have you back with us in studio in Times Square. And you know, it's been a tumultuous 2022. That certainly is an understatement. As we approach the midway point, how have client conversations evolved?
Yeah, well, look, I mean, obviously the volatility is still here. Stocks are in a bear market now, and the macro trends really are tending to dominate the conversation. So we have the Fed, we have inflation, we have increasing fears of recession. I mean, even just this morning, Chair Powell talking about the challenges with achieving that soft landing of avoiding a recession while getting inflation under control, not to mention the continued geopolitical issues. So hard not to focus on that. Even in spite of that, though, I think we're still in what I would call a pretty liquidity-constrained environment. You know, despite all the volatility, not necessarily, we're not getting a lot of conviction from clients around sort of the direction of the market. And so the levels of activity and the ability to find liquidity is still pretty challenging. So that fundamental challenge that we're working on with them to help them, you know, find the other side of their trades remains as tough as ever in this fragmented marketplace.
And it's been a busy couple of weeks for Gary Gensler at SEC. You know, thinking about these ambitious plans that they have for market structure reform. What do you see as the biggest potential impacts?
Well, we definitely saw some foreshadowing of this coming out, but now even more bullet points over the last couple of weeks about what we can kind of have in store here. So, you know, the big thing in focus is just a reaction to what we saw last year with meme stocks. This idea that, hey, something's not right with the markets, you know, what can we do to address this? And so what we have as a result is a real challenge to the existing paradigm for retail trading, which, you know, as you know, is primarily off exchange, executed by wholesalers. Some relationships, many, though not all, involve payment for order flow, and you know, that's really what's under the microscope here from the commission. So what we have now is kind of a vision statement. I mean, if this went through, it would be you know, probably the biggest market structure change since Reg NMS 15 years ago. And short on detail now at this point, but we could see some more details in the fall. We get the comment period, but I'm sure there will also be industry challenges to this. You know, that could slow things down, similar to what we saw with the Reg NMS changes that went into place last year, but really are still yet to be implemented.
Let's talk about the retail trader, because that has been a big part of the story from March 2020 up until probably the second quarter of this year, once the dip narrative wasn't working anymore. How is this prolonged period of volatility impacting their participation?
Well, one of the things we look at and we've talked about before is just, you know, what is that level of off-exchange trading, and using that as a bit of a proxy to determine how active retail investors are. We've seen that number kind of stabilize in the 40–41% range, so it's still elevated relative to what we saw pre-pandemic. That tells me that I think, you know, over the last couple of years we have seen new entrants into the market. They remain active, but it's nowhere near the levels that we saw kind of in the froth of the early part of last year, when we were seeing days north of 50% of trading being driven, you know, off exchange and by retail. So with kind of the you know, drawdowns that we haven't seen in quite a while, plus you know, volatility challenges in other you know, segments like crypto, I mean, I think that certainly has moderated the level of activity that we've seen, but it's hard to argue that things haven't changed from where they were 2–3 years ago.
Let's talk about high-profile companies like Amazon splitting their stock. It seems to be this is coming back in fashion, and you and I both know it doesn't change the valuation of the company.
Right.
You can trade slices. I think they call it Fidelity. They call it slices. While you don't have ownership, you know, you are able to buy a slice of the stock.
Yep.
Why do you think we're seeing this return of these high-level splits?
Yeah, you know, it's a good question, and it's certainly something that I think makes a lot of sense. I mean, to your point, you know, it doesn't change the economic value of a company, and in theory, it's nothing more than a cosmetic change. But when you have the Amazons, the Googles, Teslas, Apple, you know, all trading at these stratospheric share prices, in some cases thousands of dollars a share, our market structure is just not really designed to handle that. So there's ways to get around that with fractional share trading, but you know, Nasdaq's actually published some great research on this, showing this continuum between stocks that we'd call tick constrained on the low end and round lot constrained on the high end. And round lot constrained means that, you know, the size of a 100-share round lot is you know, hundreds of thousands of dollars potentially, and that keeps spreads artificially wide, which creates some warped market structure dynamics. So I think it's a good reminder. This is something that's focused on and is going to be addressed with regulation, but in the meantime, since that could take a while to play out, it's a reminder that there are things that issuers can actually do to affect the market quality in their stock, things like the tick size, things like the spread, just by changing the price of a share, and a split is one effective way to accomplish that.
All right, Jack, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.